Our next guest has strategies for using puts and calls options on three large cap companies well known to Canadian investors. Let's bring in Thom. He's Chief Executive Officer and Portfolio Manager at Moat Financial. Chris, thanks a lot for joining us. Let's jump right into it. You believe that there is money to be made by selling a call on Wheaton Precious Metals. That is a streaming company that has done very well in the market recently as both gold and silver prices have run up. So briefly remind us what a call option is and tell us what moves you've made here.
Yeah, great. Thanks for having me. So Wheaton Precious Metals stock is up about 19% year to date. All the precious metal stocks have been doing well with precious metal prices pushing higher. So owning that stock, we want to try to generate some additional income from it. So rather than just relying on a dividend, we're going to sell a call option at a higher level than the stock is currently trading. So what that means, stock closed yesterday at $77.68. We are going to sell an August $86 call option for $1.35. So that means that somebody has the right to buy that stock from us for $86, currently trading in the 70s, but they're going to have the right to buy it from us for $86 by around mid-August. And for that right, they're going to pay us $1.35, which is 1.7%. And if from here we see the stock move up to those levels, then we're okay moving on from the stock.
Okay, let's go to Microsoft. Shares closed yesterday or on Friday rather, at $430. You're looking at selling the August covered call on this one. So explain this strategy and remind us what a covered call is.
Yeah, so same thing here. If you own at least 100 shares of Microsoft, so each call option represents 100 shares. So stock trading right now at 430. We're pushing up into all-time high territory every single time the stock goes up. It seems to be making a new high. So again, we're going to go out to August and we're going to sell the $450 call for $10.75. So that means that we take in $10.75. That's 2.5% of the current share price. That's a great addition to the yield for any income-oriented investors. And we're giving somebody the right to buy the stock from us $20 higher. So if the stock stays where it is or goes down or goes up slightly, we have no risk of losing our stock. If it moves up to a $450 level at expiry, somebody could take that away from us. That's a net sell price of $460.75. That's around 40 times earnings. At certain levels, no matter how great a company is, it's time to start reallocating a portfolio, and we're willing to do it this way.
Okay, now here, the number 3 on our list is a stock that is not making new highs. It's Toronto-Dominion Bank, and viewers are familiar with the story here. It's got big problems in the United States, regulatory problems. Those problems have not yet been resolved. Penalties have not yet been announced. Analysts say it could be dire. Without getting into the specifics of that, you're looking to sell an August a covered put on this one. Explain that strategy.
Yeah, so you summed it up pretty well there. The stock has been under pressure. Closed yesterday just below $77 a share. When all this news first started coming out, the stock got pushed down to just a hair below $74 a share. So we're choosing that as a point that we say, look, we think a lot of this is getting priced into the stock. There's definitely uncertainty there, but we're relying pretty heavily on the fact that their underlying core business as a Canadian bank is going to remain strong and robust for the long term. So we're saying $74 is a level that we're willing to enter the stock. So rather than sitting back and just waiting and hoping that it gets down to that level, we're going to take action here. We're going to sell an August $74 put. So what that means is somebody has the right to sell us the stock at $74 if it falls below that level. But for that right, they're going to pay us $1.20. So our net entry point is actually going to be $72.80. So well below where the current share price, where the stock is trading currently. And that lets us start to get a bit of exposure to TD Bank at levels that we think make sense without having to wait for the stock to actually get down to those levels.
You're a professional investor. You do this every day. What's your advice to retail investors, do-it-yourselfers, when it comes to options?
So definitely you're going to want to make sure you're doing your research and you are doing the math 2 or 3 times before you hit the button. Never engage in option selling or buying on stocks, in my view, unless you are willing to own that stock. So TD Bank here is the example. We're going to sell that put. We're going to enter the stock at 74 if it goes down. But if it goes way below that level, we're comfortable owning that business. So don't get lured in by short-term profits because option prices are really high. Make sure that fundamental business is something that you want to be invested in. And you know what? Don't be afraid to ask a professional for a bit of help. Sometimes that can help too.